the number one central bank, the Federal Reserve, making its call, and Kevin Warsh's first meeting in charge as chairman is going to be a major focus for markets. Inflation's remained sticky. Non-farm payrolls were huge. We still had the Fed, even at the last meeting, leaning towards cuts, but we did get that big dissent from Fed members. The market is pricing in about a 60% probability that we'll see at least one rate hike by December. Hello and welcome to ATFX's FOMC Meeting Preview. Today we're going to look at expectations of what the Fed's going to do, taking into account, of course, it is Kevin Warsh's first Federal Reserve Bank meeting as chairman. And then we're going to have a look at a few trading opportunities. How's the dollar going to move on the back of it? So we're going to look at gold, which is still very much moving in line with the dollar. We're going to have a look at euro, the world's number one traded currency. And we're going to have a look at dollar yen, which again has a couple of nuances, especially with the BOJ and the Fed all coming out in the same week. As we know, data has probably not been favouring the politically appointed Kevin Warsh. He's kind of brought in by President Trump to cut rates, and we've seen much stronger, stickier inflation, obviously brought about in part by what we've seen in the Middle East. 4.2 was CPI last week, obviously nowhere near the Fed's 2% target. The other side of the dual mandate for the Fed, of course, as well, is employment numbers. Non-farm payrolls 2 Fridays ago, or Friday and a bit ago, came in much stronger than expected, confirming the resilient job market. Now, the market is pricing in about a 60% probability that we'll see at least one rate hike by December. We still had the Fed, even at the last meeting, leaning towards cuts, but we did get that big dissent from Fed members. The interesting thing about this meeting as well is we're going to get the dot plots as well, which show where Fed members see the rates going. And this could be where there's a big divergence again between Fed members. And obviously it's going to be a bit of a task for the new chairman to bring everyone in line if he can. So what we're thinking is going to be a lot of volatility on the back of the forward guidance we get from Kevin Warsh and from the rest of the committee, of course, and how he communicates that message and any updates that he's going to give us on how the Fed's going to operate underneath his leadership. So it's very interesting. Everything will be analysed with a fine tooth comb. So we're looking at, rate cut, or let's look at hike timelines. We're looking at that forward guidance and the economic projections, which are those dot plots. That's going to be the big movers. So potentially a huge end to that Wednesday session in the New York time zone. It could be massive. It will no doubt drive through into the Asian session and drive things forward. And then later on the Thursday, it will flow into Bank of England, Swiss National Bank as well. So huge central bank week this week. But no doubts at all, Fed is the number one show in town, really. So without any further ado, let's go and have a little look at some of the charts and where there's some possibly very interesting trading opportunities coming up. Here we go. Here we've got the daily gold chart here. And as always, gold has been flying around. So it's still not behaving anywhere near its traditional haven status and is very much trading in line with the dollar, which means it is very much a live trade for this FOMC meeting conclusion. So obviously what we're looking at are we going to get hawkish leaning from the Fed, which would be a change from what we've heard for most of the year and should see dollar buying take off. Obviously, we've got markets pricing in. US yields have gone through the roof really over the last few months because of the conflict in the Middle East. Jobs numbers have been strong. So they're still they've drifted off a bit, but they're still relatively high. Do we see the Fed come in line with the market, or is the Fed going to remain a little bit resilient and maybe even lean on the fact that we're seeing a resolution in the Gulf? It's going to be a very interesting update that we get. Dot plots are going to be key. So here's that chart that we're looking at. This is gold. It's moved from the low that it hit just a few days ago. I think it was last Wednesday. It's actually up yesterday. I think it peaked at around about 8% higher than that low. We're now sitting in the middle of the range, but we're not too far away. And as you can see, key level on the top side now, resistance trend line. That's a good longer term trend line, and the 200-day moving average. Now, this has been a key move. We broke down beneath it on the 5th of June, and we've been underneath it ever since. And as you can see, that 200-day moving average and the long-term trend line are coming in around about the same level. Makes it kind of a double whammy. So If we do get a little bit of a more hawkish leaning from the Fed, expect gold to be sold and it will challenge these levels. If we're somewhere around that, obviously we're going to use, traders are going to be using that to leverage off that key technical level. Other side of the case, of course, if we do get a more dovish lean, I think it's going to be a bit tricky given the recent data, but a dovish leaning Fed and Kevin Warsh hinting that they do want to get back into that easing cycle, then if we're near these levels, a break to the top side, dollar selling could see a break higher, and then the next level we're targeting is back up to that 4,800 level. So plenty of opportunities in gold, and we're going to see a couple more in the currencies. Now, bear with me while I skip over to our Euro daily chart. Okay, here's the daily chart on the Euro, and obviously we've seen plenty of volatility in Euro as well, not the percentage move we've seen in gold. We're sitting in the middle of the range now. Another interesting double whammy coming up here. There's that moving average, and then there's the longer term trend line kind of coinciding around about the same level, but 116.70 odd. Give it another couple of days, 116.80, we're probably going to be around there. So like I said before, a more hawkish Fed looking at having to have these rate hikes that the market is pricing in should see the euro transfer down to these levels. Short-term support now at 115.20. We've got these lows down around about 115, the figure. A movement down here and a breakthrough here on a much more hawkish Fed could see these moves extended. First line is down here around about 114, which you can see with these double lows down there, and then it extends all the way down much lower. Would need a very hawkish Fed, I would suggest, for that. Slightly more dovish Fed should see euro raise up to these levels. As I said, round about 116.75, 116.80. That's probably going to be initial resistance. A really much more dovish, and this could coincide with dollar selling because of the updates from the Middle East. Could see a break higher. Next stop is around about this 118 level. As you can see, there's like a quadruple top up there. Then we're looking for that April high up around 118.50, and then kind of sky's the limit. Annual high up around just underneath 121, the figure. So euro, good trading opportunities. Now we're going to have a little look at dollar yen, and that's the double whammy where we've got two central banks this week. And here we go. We know the issues that we've got with dollar yen. I've been talking about it for a fair while, mainly because of these moves. Intervention from the Bank of Japan. We're back at sticky levels from the Bank of Japan. Later on today, we hear from the Bank of Japan, we're anticipating a 25 basis point hike. Whether that's enough to drive the yen higher will probably come with the forward guidance as well. So stronger yen could see a break of these levels here. Short-term support just underneath 160. These lows here, 159.72, 159.64. A break there can take us down. So on the Fed, we'd be looking for a more dovish Fed or a resolute Fed that's not going to look to hike rates. That could help. We could get the double whammy. You get a hawkish Bank of Japan, you get a dovish Fed. We could see dollar yen down to 158. The real support line here is now just underneath 157. Now the pain trade for the Bank of Japan Ministry of Finance is we don't see too much movement on the Bank of Japan, and we do get a hawkish Fed. They come in and say, look, we do feel the next rate move is going to be a hike out of the US. It should see dollar yen challenging these levels, 164, 160.64, previous high here, 160.59, and then we've got the high up here about 160.72. A sharp move here and a clean break should see it move up, and it would go all the way back to challenge the high that we saw, he says, moving very swiftly over to here, which was just underneath 162, the figure. There you go, 161.91. So that could be the move. But if we do get that, traders are going to have to be on the alert, because we could see the Bank of Japan come in and smash dollar yen, and you can get these kind of moves. That's a 2.4% move. That was huge on the day back at the end of April. So the Fed will be the big mover across the currencies and across the other products. It's going to be a very interesting to see. It's going to be analysed with a fine-tooth comb. Trading opportunities are great. Thanks for tuning in for this one. As always, if you haven't, please subscribe to our channel. We'll keep you up to date as much as we can in the current market with what's going on. But thank you for tuning in, and any problems, come to us, give us a call at ATFX. Thank you.